Victoria, if you could come to the stage. Victoria is our wonderful host and moderator. She'll make sure that everybody stays on track. And if we could give Victoria a round of applause, please.
Okay. Great. Good afternoon, everyone. I hope you're all networking. Are you all good? You're alive? Ready for more nuggets? Because this panel is going to be a great discussion again. And again, who has properties here? Or a property? Good show of hands. Is anyone looking to buy property? Good. Anyway, my name's Victoria Ajikum, and I am the co-founder and director of On Point Property Management Limited and the Ghana Property and Lifestyle Expo. I have 15 years experience in property, from management, lettings to constructions and interior. So it's a whole system of the industry. But today I'm going to be calling up my panel of speakers. If you'd like to come and join the stage. Great, so can I have the first person, Roja? Can you come up and introduce yourself?
Thank you. Hello everyone, good afternoon. I'm Roja from the Mortgage Consultancy. First time here, very excited. And I have been working in the finance industry for over 16 years now. I started my career in finance with Santander Bank. I was with them for nearly 9 years as a mortgage advisor until 2016, when I moved to become self-employed and run my own business. Within our firm, we are 4 advisors dealing with any type of property finance. We do residential mortgages, buy-to-let, expat mortgages, bridging finance, development, any type of property finance you can think of. Now, I'm also a specialist in equity release and later life mortgages. In fact, that's my passion, to deal with retirement mortgages and equity release. Now, looking at our audience, no, I don't think anybody's over the age of 55 here, so I have to steer my discussion a bit. But you surely have parents, grandparents who have properties that they have equity, so I can guide you as how you can talk to them, and perhaps they could help you. So I'm also a property investor myself. I have a small portfolio of let properties. I've done auction purchases and selling at the auction. I've done development in the past, so I have hands-on experience in this field, as well as giving financial advice. And I'm here today to help you with any questions relating to these matters and help you with your investment journey. Thank you.
Great. Can we have Usha up, please?
So, good afternoon, everybody. I'm Usha Coker, and I own UK Financial Services. I am a mortgage and protection financial advisor. I've been doing this for somewhat 7 years, but I've been in the financial industry for 25 years now. So what do? I help people with mortgages for their residentials or their buy-to-lets and their portfolios. I can also assist with semi-commercial or commercial finance. And I also do protection, so life insurance, critical illness, all those things that you need to protect your family in the event of you being unwell. So why use a broker like me? What's the difference? Some of you think that, I've been with Barclays or HSBC for the last 15 years. They're going to give me a really good product. I'm going to walk into the bank and they're going to look after me. But they can only give you the best product that they have available on their scheme list. They can't give you the product that is best for you. So a broker like me would be able to search the market, source somewhat 2,000 or 3,000 products across 55 different lenders, and give you a product that best suits your scenario, but not only for today, but for years to come. Part of what I do is make sure that you speak to me. Tell me what your plans are. Where do you want to be? This is not firefighting for today, but planning for tomorrow. Lots of people have questions about the inflation. Why is it so high? Why is the interest rate so high at the minute? What is inflation? Well, simply put, inflation is going to be when products and services have become too expensive and are not in line with the inflation that incurs on your salaries. So if your salaries are only going up 2% per year, but inflation is 10% a year, which is what it was, then why is that? It's because we had too much money flowing around in the last 3-4 years in the market, and suppliers and manufacturers were increasing their prices because they knew the money was there. So what the government have done is they're forcing us to earn less, to spend less, so that the end users benefit in the long term. So what I'm going to leave you with is, if you have properties and if you're looking to grow your portfolio, or you don't know where you're going to want to be in the future, then you need to come and speak to someone like me. Thank you.
Thank you. Thanks. Can we have Dwayne up, please?
Hello, good afternoon. So my name is Dwayne Rapley, and I represent a platform called Searchland. Now, Searchland is an off-market platform sourcing tool, which allows you as a SME developer, a renewable energy provider, or an architect, for example, to find and qualify land at speed and at scale. So our platform takes a lot of data from lots of different sources and puts it all into one place. So if you're looking for your next HMO, your ground up opportunity, or strategic land, everything within the built environment, you're essentially going to be able to find that within Searchland and be able to send letters directly to the vendor from our platform. So it's an end-to-end tool to be able to find and qualify property quickly across the whole of the UK.
Fantastic, thank you. And last one, please. Can we have Ola introduce yourself?
Hello everyone, I'm Ola. I'm a chartered surveyor. I work primarily in commercial property. Question for everyone. Is there anyone here that runs a business that operates from a property? Like an office, maybe a shop, etc.? Perfect. So in the process of taking a shop, I act as your representative to negotiate with your landlord on your behalf, to make sure that you're paying the right rents. You're on fair lease terms, and to make sure that you're in the property and the property doesn't affect the running of your business. The reason I started the business is I have a lot of experience working in commercial property on the landlord side, and I realized a lot of small businesses don't get the advice they need, so they often are in the property paying exorbitant rents because they've done it themselves. So I set up the business to help businesses keep more of their profits for themselves and pay less on rent. So if there's anyone that is looking to start their property journey, for example, you have a startup business and you'd like to take a commercial property, maybe you need to run a cake shop, etc., speak to me and I can help you in the initial to help you find a property, but then also to negotiate fair lease terms and fair rent. Thank you.
Great, thank you very much. Right, so the first question will be to Roja. What is an equity release and what can it be used for?
So equity release is a way of unlocking the cash that you have accumulated in your property. People use it for various reasons. From experience, most people are nowadays, I would say maybe 50% of our clients for equity release, they use it to pay off their existing interest-only mortgages, which were mainly taken prior to 2008. And also the other reason is a lot of younger generation, first-time buyers or people who want to get onto the buy-to-let market, they need a deposit. So parents, grandparents, they can do equity release and they can help their children, grandchildren. The beauty of equity release is that it would be a tax-free lump sum. People can either take a lump sum, or it can be a stream of income. They can always go back to the provider and get further advances. A lot of equity release lenders, they offer a drawdown facility, so it's available at any time. People just make one phone call and they transfer the funds to them. It's a very, the thing is, with the equity release, it's becoming more and more popular. At some point, there was a lot of bad press about it. However, it has been a lot more regulated. There is a very sleek and smooth process for equity release, and I would say every single case, it only takes something between 3 to 6 weeks from the day we apply until that the client have the funds in their accounts.
Yeah, no, that's fantastic. I know before interest rates hiked, do you think that's been a deterrent from people to release equity?
I think mainly it's because this is what I find from the clients we have. No matter what type of job you have or what you've studied, every single first-time buyer, well, most of them, they need their bank of mom and dad.
Yeah, of course.
So, and as I said, a lot of people, as well as doing their day job, they want to get into property, they want to do investments. So it's a way of, as I said, releasing cash, and you can use it for any purpose, really. You can, and the thing is, you can use the equity release to purchase a property as well. It's not just a remortgage. You can use it for purchase. Up until March, there were lenders who would actually do equity release on buy-to-let properties as well. However, due to all the fluctuations in the market, those products are not currently available, but I think they will come back at some point.
Yeah, totally. I agree with that. Okay, so let's move the question on to Dwayne. Right, how can I use Searchland to invest in land and property?
Yeah, great question. So Searchland was kind of set up to address issues when it comes to finding land, and both land and property. So some of the issues that we've seen in the market is that people don't really know who owns a certain plot of land or a building, and they can't get into contact with them. And so what Searchland did is pull together lots of different data sources from the likes of Land Registry, Royal Mail, from different planning applications from every local planning authority, puts it all into one place. It then allows you to send a letter directly to the vendor. And so by looking onto a plot of land through our interface, you can know exactly who that owner is and know exactly who to contact in order to get that opportunity. So it's trying to break down barriers around the accessibility of different types of land ownership. And so what we can do is start to build a template for, like this building, for example, the use class is F1, which is a place of worship. And so we could say, actually, go onto our platform. If you're interested in a building like this, you can find other buildings with a similar use class and find the same sort of property across the whole of the UK. And so we can make it very, very specific to the type of opportunity you're looking for. So that's why if you're looking for a HMO, you might want to look for use class C4. If you're looking for a residential property, use class C3, you can put that as a specific criteria and then put that across the whole of the UK to be able to find a property which might meet your criteria. Send a letter, and then hopefully the vendor will then get back to you. But it takes a bit of work, but we do set things up in place to be able to allow you to make the most of the opportunity within our platform. So.
Okay, great. Next to Shah. Do lenders require you to have personal or mortgage protection insurance?
So the simple answer to that is no, they don't. There used to be a point that obviously that protection used to be sold alongside your mortgage. And what happened after that is everybody said, oh, it's been missold, and all the whole PPI thing happened, and everyone got, all these companies got sued for compensation and everything else. So then it got stripped out to make two separate elements. And there was mortgage and there was protection, and you didn't need to, and the advisors weren't advised to actually give protection assistance unless it was asked for. So then everybody went along and said, oh, I was never told I needed it. So then again, there was another reason to kind of crucify the lenders. So then what they did is said, right, we're going to merge the two back together. The advisors have to advise on the products that are available, but they don't have to take it out, and they can sign a disclaimer and a waiver, which means that they don't have to have it. The question is, why would you not want to have it? You buy a car, you won't drive it off the forecourt without having insurance. You have house insurance, and the lender will say, well, if you want us to lend on it, you need to make sure that you've got building insurance. But people are less worried about the building insurance, more worried about getting accidental damage just in case a TV falls off the wall. But you won't, the biggest debt you're ever going to have, which is going to be your mortgage, where you and your partner and your children and your family are going to live, why would you not have it protected to make sure that in the event of you passing away, that your family are protected? So no is a simple answer. The mortgage lender does not require you to have it, but you'd protect your car, you'd get gap insurance, but you won't cover yourselves. So from my opinion, it is actually one of the most important insurances you could have to protect your family.
Thank you for that. And on to Ola. So in terms of the commercial buildings, can you explain the different type of leases?
The different types of leases. With commercial leases, there's pretty much one type, but a lease is a lease. It's hard to explain. A lease is a lease, but the terms of the lease are what binds you. They give you, so in the lease, there's tenant obligations, landlord obligations. You, as a tenant, has to stick to the tenant obligations. If you've ever fallen foul of tenant obligations, you realize that, you're in trouble if you do that. So, I think the question is
sorry,
very...
Is it quite ambiguous? Okay,
Yeah.
Let's just go back to that. So, for example, following COVID, there's been quite a lot of retailers that have had to, come out of their leases for their shops, etc. What is the guidance in terms of if the landlord says, look, I want you to increase your rent, what's the next process for them to, do they have any sort of protection over that?
Yeah. Firstly, I'll direct the question out to the audience. Is there any of you that has a business that sells a product, like a retail product or anything like that? So it's all service businesses here. Hands up if you have a product business, like a cake.
So if you sell any items.
etc. Okay. So I'll direct it to the hypothetical people. A lot of people start businesses and they want to do something great. Like, for example, you have like a recipe for a meal that you're very, very good at making. The next thing to do is get a property, get a shop front that they can sell their products from or their food from. What they don't really consider is those properties are owned by typically large organizations. A lot of the high street, as you see, they're not really owned by individuals, they're owned by large companies. And those large companies, they have the finances and the wherewithal to instruct chartered surveyors like myself. And those people dictate kind of the market rents by valuations and etc. So along the story, the person's gone into the property, taken one of these leases, they're operating their business, selling, doing well. One day they get a notice from the landlord saying, your rent is going up by, and this is for real, your rent's going up by 100%. This happened, for example, I worked in Arch Company. It's a company that, those railway arches, now they put shops in them. It's been in the news that a lot of them, their rent's going up 100%, 200%, 1,000%, because the company that bought the properties, they decided, they wanted to readjust the rents to market rents. So you've gotten a notice saying that your rent's going up by 100%. Most shop owners that I've seen have two reactions. They either, okay, I guess I'm gonna have to reduce the amount of profit I'm taking from the business. Then the other ones, they just fold. They just go out of business. They say, I can't sustain this, and it's a route out. However, the thing that they don't really understand is, because you've gotten a notice saying that your rent should go up 1,000% or 100%, doesn't mean that that's what you have to stick to. You can challenge that rental increase. You can make representations, and this is typically done by understanding the market, understanding what rents are being paid on the high street, similar to yours, and that way you can challenge it. Typically, people don't do this, and that's because they don't get surveyors involved. A lot of small businesses don't understand the value of surveyors, and this is what my business is trying to do, to educate people and being like, okay, because they've proposed to increase your rent, doesn't mean you have to just accept it. You can challenge it, you can fight it, and actually you can get somebody that's a professional and knows what they're doing, works in this market, and they can help you challenge it. So that's a long way to answer your question.
No, that's fine, Ola. Okay, back to Dwayne. How can I get in touch with land or property owners?
Good question. I think I'm going to take a bit of a leaf out of Ola's book. I just need a couple of people to shout out, what type of properties are we looking for? Obviously, this is the property investment segment. So what type of properties are people looking for? Just shout out. HMOs, buy-to-let, any other type of properties? Commercial, perfect. So that's a really good spread of different types of properties. With us, because there's so much flexibility within the platform, the way that one person looks for HMOs might differ from somebody else. So you might want to look for HMOs within Redbridge specifically, where the title register has an expiry coming up with Redbridge. Another way that you might want to look for HMOs is within another specific area. Or you could say, actually, we're looking for land which doesn't have the Article 4 as a bit of a constraint. So lots of different ways to go about it. And because we bring lots of data into the platform, we go through each HMO register, display it all in one place. So you could go directly to the person who owns the HMO as per the register. You could send a letter directly to the company ownership address, the proprietor address once you purchase the title deeds, or you can actually go to the address on the plot. And so we give those options as part of the platform in order to you to be able to just do that and automate it. So in terms of being able to go directly to vendor, that's something that we facilitate within our platform. But the way that you can utilize it is so different just based on what your different type of opportunities that you need to see. So commercial to residential, we build that as a criteria. And again, you might want to look for commercial within Redbridge, you might want to do it within Essex, up in Birmingham. It just really depends on what you're looking for. But we just bring the data in and we start to break it down based on our use classes, based on the density of the actual plot itself, based on whether it's got planning permission as well, so you can dictate whether you want something with planning or without. Put it all into one place on our platform, then send letters or follow up however you need to. I think to that point, the tool is only as good as what you're bringing to it. There are lots of people who find opportunities just through their network, which is absolutely great. So you can use our tool to be able to complement that and be supplementary to how you're already finding property. Or you might be a complete beginner, and again, perfect, because you can use our tool to be able to find opportunities in a way which you were struggling to do so before. A lot of people will go through auctions, a lot of people go on the market to find opportunities, but the value there tends to be a little bit more diminished. So we offer off-market opportunities and on-market, but again, depending on what you need to do, you're going to get a lot out of the platform.
Great, thank you. Now we're going to open the floor to questions. Does anyone have any questions to the panel?
Any questions? Okay, I'll start at the back and then I'll come to you.
Hi, this is to Dwayne. What's the subscription or rates reusing that platform?
Yeah, great question. So we've got 3 different subscription tiers. It goes from the starter up to your professional. So the professional is £520 a month. We tend to see renewable energy providers, PLCs, use VAT tier just because they're looking for over 100 units, land over 100 units, land for solar and battery storage, all the way down to the starter tier, which is £130 a month if you're paying in monthly instalments. And that will allow you to basically just look at a plot, find out the ownership details, find out any constraints, so whether it's within a flood zone, whether it's within the green belt, for example. But still, throughout each tier, you can still send letters directly to the vendor, and you can find out ownership details. So it does vary depending on what you need to do and what you need to get out of the platform. But basically, for us, we're a challenger company. We've only been around for about 3 years, so we want to make sure that the platform is working no matter what stage of business you're at. So we're happy to kind of look at the price and see what we can do to help facilitate.
Great, thank you.
This is to Ola. Just to understand, what's the difference between a license and a lease when you're getting a commercial?
Yeah, that's an APC question. It's like a standard foundational question. Anyways, so a lease, the definitions, what makes up a lease is from a case law that was done in 1987. Is Street versus Mountford, very popular case for surveyors. So it determines that a lease needs to have a rent payable. It needs to be for a defined period of time, and it needs to have exclusive possession. So that means I can lock the door to my space, and I'm paying you rent I'm paying you a definitive amount of rent, and then also it's for a defined period of time. Those are typically what constitutes a lease versus a license.
Okay, thank you. Anyone?
We have another question for
I
it.
think there's someone at the back as well.
Okay, we'll start here and then we'll come to you.
Thank you. I have a question for Roger. How much they can borrow and how long they have time to pay off the mortgage? People over 60.
Okay. First of all, any type of equity release or retirement mortgages, they are designed for people who are over the age of 55, actually. With these types of mortgages, there is no time limit. So they can have the mortgage for as long as they live at that property permanently or until the second death, if it's a joint property. If the client moves to a permanent care home, that's when the lender expects the funds back. So there is no actually a time limit that they can keep those types of mortgages. What was the second part of your question? Sorry. Okay, so how much they can borrow? These types of lending are really, how much they can borrow is based on the value of the property and the age of the applicant. So the way it works is that the older the applicant is, the more they can borrow. So if I have a client who is 55 or 56, they are very young for these types of mortgages. Therefore, I mean, we need to do calculation. There is no set figure, but it's around, just on top of my head, it's around 20% of the property or 10%. It's not a lot, but if somebody is, for example, over 70, then it could go up to 40% of the property. There is no, so we have a search system that when we put all the property details, the client's details, it will calculate how much they can borrow based on the value of the property and the age of the client. Does it answer your question?
Thank you.
Hi, so if you're buying a new property in this current climate or economy, I think it's for you, if you're buying a property in this current climate with the interest rates going up, what would you advise people in terms of saving, or would you advise they still try to get onto the market, or would you advise them to wait? What would be guidance in that regard?
I think that's probably a question that most people are wondering right now, that is it a good time to buy? So the answer, in my opinion, the answer to that question is, the interest rates are high at the moment, but they're not going to stay high forever. So they might only be in that kind of 5% mark for the next couple of years. But the house prices have come down by, let's say, 10%. So let's say, for instance, if you are going to pay £5,000 extra in interest over the next 2 years in comparison to, let's say, a year or 2 years ago. but you're buying a property which is £20,000 less than it was. Now, eventually what will happen is the interest rates are going to come down and the house prices will go back up slightly again and start stabilising. So in my opinion, if you are somebody who has money put away, whether it's for a buy-to-let, which is 25% is the norm, to have 25% deposit for a buy-to-let, or whether you're a first-time buyer, then it's as little as, actually it can be 100%, but the less deposit you have, the smaller the selection of lenders become. So you'll find lenders who will accept 100% mortgage or 95% mortgage or 90%, and at 90% it becomes, the door's open to all of the lenders. So is it a good time? I think that it is. You just have to find the property that you're happy with to ride this wave out, because the whole thing with property is you have to ride it out. It's going to be an investment for the long term, so it has to be for people that are going to be accepting the risks that come with it. I hope that answers your question.
And I'm going to add to that, because I get that question a lot as well. And what Usha said is correct. And I actually heard, I think it was Anna or Victoria say something when we did a podcast, when people say, when is the right time to buy? And I don't know if it was Anna or Victoria, they said, the economy is what's in your bank account. So there is no right time. Like, your right time to buy might not be mine. So my right time to buy might be, I've been living at home with my parents, I've been saving my money, I just graduated, got this new job, I'm set to go, regardless of what the interest rates are. And historically speaking, property will always appreciate in the long run. So maybe in 2, 3, 4 years it might fluctuate. But if you're talking about long expanses of time, like what Usha was saying, it's going to appreciate. So Usha in her opening was saying, why do you need a mortgage broker? You need someone who's going to speak to you, understand your individual circumstances, and give you advice that is tailored to you. Don't watch the news. Don't watch the news. The news is there to make you look and click and to get headlines. They'll never say, like, you'll never see in the news, a man was walking his dog and got home safely. You're not going to see that. It's meant to have the extremes. So we are going to have a session after this, which is going to be a Q&A session for first-time buyers and just mortgage questions. And we're also going to have the Ghana Property Expo session after this masterclass. But I just wanted to add that bit, and we had a question.
Anthony,
Let me, because I know you, and everyone think I'm biased. I'll come back to you.
Hi, this is a question about equity. I'm trying to understand it. So if you release equity from a property, who pays? I mean, obviously, say you pass that over to your child as a bank of mum and dad. Is there any interest payable on that equity? I mean, who pays it?
Okay, so let me explain to you. Equity release works pretty much the same as a traditional mortgage. So basically, you stay 100% owner of your property, and the lender will put a charge on your property, just like when you take out a traditional mortgage, right? So there would be a charge on the property. Now, you fix your interest rate for the life of the mortgage. However, that doesn't stop you. Let's say, as Usha said, the interest rates are not going to stay high forever. If in 6 years' time, or I don't know, 7 years' time, the interest rate drops, you can always remortgage it to another lender. As I said, this type of lending, that's the main reason it's becoming more and more popular, because they're very flexible. The lenders are very flexible. So once you fix your interest rate, there is no obligation in terms of the monthly payment. The interest gets added to the property because they cap it a certain loan to value. But if they wish to make monthly payment, they don't stop you. So that's another flexibility. You can make monthly payment. Now, equity release providers, just like, again, a traditional mortgage, they expect you to stay with them for a minimum, there is a time period. It's at the moment, it depends on the lender, depends on the product, but it's something between 5 to 10 years. So within the first 5 years, just like a traditional mortgage again, if you clear the balance, they will charge you a penalty. However, even within the time period, you have the allowance of normally up to 10% of the outstanding balance each year to reduce the balance. And then after the 5th year, you are free to either clear the balance or do a remortgage, or you can keep the mortgage. And all of these equity release providers, they offer porting products, where if you, for example, if the client in a few years, they want to downsize and move to another property, they can take the equity release with them to the new property.
Can I say something just to define terms? Because sometimes, like, there's terms within the industry, and there's terms that regular people use. So there's equity release as in later life lending. But you could also release equity from a property you have. So they're two different things. So what was just being discussed is 100% correct. But just for the terms, sometimes people, you might, I know that was a good answer, but just in case someone's sitting there saying, but I own a property, I just want to release equity out of my property because it's appreciated in value and I want to capture some of that money, that's kind of a different thing. You had a question?
Yeah, my question's for Dwayne. It was just to ask you, for Searchland, is there differences between other companies like Nimbus Maps or Property Data, or is it just on the price point?
Brilliant question. So we are a competitor within that kind of market. Nimbus is a great platform. I won't completely bash them, but the way that we can find land within Searchland and property within Searchland is just much more intuitive. The way I normally describe it is that I'm not sure whether you're a fan of Formula One, but Formula One, you've got similar cars. Alfa Romeo and Ferrari have a similar engine, for example, similar parts, but the way they're put together is different. And as a result of that, you've got one car which is 30 seconds down the road, you've got another car which is midfield. So the way that we've built the platform has similar components. We both use data from land registry, both use data from planning applications, but the way that we've put it together, it's much more intuitive, and as a result, it's much faster to find opportunities and find quality data as well. So I think those are the main differences. With Nimbus specifically, they're a bigger unit, they've been around for a lot longer. With us, we're a smaller unit, 4 co-founders, 3 of them come from a tech background, so we're very much tech first. And that kind of goes back to the kind of the user interface, making sure that it's a lot more accessible to be able to find opportunities as well. Other differences with Nimbus, you can't send letters directly from the platform to vendor. You're also limited in the way that you can search for different planning applications as well. So there are quite a lot of differences. Some of them might be quite significant to yourself, some of them might not be. But overall, we've just built a platform which we believe is, at the moment, better. That changes, it's tech, things continue to shift and change, but at the moment, we feel like we're in a better position and we're looking to continue to build a platform based on what people are coming to us with. So.
Great, fantastic. Well, we are coming to the last point of this panel discussions, but please do visit all the panelists here and go and ask all the other questions that you do have. They're here. You can go downstairs. You have your stands downstairs, so you can have a discussion after this session, and then again ask them in detail your questions to get your answers. Okay.
Yes, and also in the magazine, which you should all have, there's contact details for everybody. One of the things that we really need to make sure that we're clear on, because obviously mortgages, equity release, later life lending specifically, it's a different kind of license that is needed to do that. For later life lending, you are surrendering either part or all of your home, okay? So as far as the equity release, later life lending, please, please, please make sure that you have a discussion with the mortgage consultancy and they can clarify that. And then we have Usha, who is a mortgage broker. So what's going to happen now is we have a masterclass. I think everyone in here is able to go to the masterclass. Make sure you have the right tickets for the masterclass. I'm going to be doing like a Q&A mortgage type session, and then we have the expo Ghana, you can say a little bit about that.
Yeah,
Ghana
so
Expo.
if you're looking to purchase property in Ghana, we are actually holding an event next month where we're inviting top reputable developers from Ghana and other industry experts. So if you want to learn more about the property market, we're having a masterclass in the next, what was it, 20?
In about 15 minutes,
yeah.
so there'll be a short break.
Yeah.
So if everyone could give our panelists a round of applause. I expect that as they come off the stage, people will have questions for them.